Travis, the ETF or exchange traded funds hit a record 11.7 trillion this last month. That's with a T.
$11.7 trillion in ETF asset.
That's a lot.
That's a lot of money.
That's a lot of money. That's not a surprise given the ease of tradability and the tax benefits that are compared to mutual funds. But another barometer of the ETF industry's health moved in the other direction. Fund closures jumped last month.
Yeah, Steve. I mean, according to Bloomberg Intelligence, I think it was 39 ETFs closed in February, and that's a 44% increase from January, and it's over double from February of 2023. The closures were a mix of styles and themes, but they all had one thing in common. They were all equity funds that closed. So the pattern here, Steve, is that when markets are roaring like they were in 2023, companies take shots at gathering money by launching numerous products, many of which are not good ideas and eventually close due to lack of demand.
That's a good point, Travis. Let's look back a few years, back to 2021. There were 475 ETFs launched that year.
Jeez.
Another 419 were launched in 2022. And in 2023, there were 529 new funds brought to market. Mm-hmm. It's a lot of new opportunity.
Well, yeah.
I'm going to get to that, right? Yeah. It was being sarcastic. Not all of those were good ideas, though, and that will attract capital and that will survive. Mm-hmm. So as the ETF Graveyard grows, expect Wall Street to bring replacements to the market. If Wall Street thinks there might be a demand, they're going to develop a product to attract that capital.
That's truer words have never been spoken, Steve. And that's why it's a good idea. I mean, with the flood of ETFs coming to market, to just know what you own. Start with the parent company bringing the ETF to market. I mean, what's their firm philosophy on products? You know, who are they in the marketplace and who do they want to be? I mean, if a new fund company comes in and says we're going to be the low-cost provider, good luck. Mm-hmm. I mean, that spot's already been taken and probably not going to survive. Another thing to do is understand the people running the strategy. I mean, how long have they been doing it? What's the size of the team? And do they have the resources to execute on what they say they're going to execute on? And then last, I mean, understand the process. Is it a rules-based process? Is it a person-based process? And if it is rules-based, can people override it? Or do they consistently follow their mandate? So there's a lot involved with these funds, Steve, to consider. But if you understand those attributes, you'll go a long way in understanding if that ETF has the potential to survive over the long term and if it's investable.
That's right, Travis. This has been great. I look forward to it next week.
Look forward to it as well.